Yeah, you mentioned private sector angst and the rhetoric. Um, some of the rhetoric was a bit strong. Um, how is it now that private sector entrepreneurs are reviewing that and rethinking that? And what would that mean for foreign investors that have been successfully putting money into some very successful private sector businesses there, like Alibaba or Tencent or and anything?
Yeah, it's clear that the Chinese government went overboard in a big way on a number of policies over the last couple of years. One was simply the way they spoke about private companies, mostly in that they kept emphasizing the role of state-owned firms rather than private companies, and it made a lot of entrepreneurs nervous. And then on a more concrete level, the effort to try and deal with some social issues, similar to the ones that we're facing here about inequality of wealth and unequal access to healthcare and education and housing, which the Chinese government described as a common prosperity goal. They pushed that too far, particularly with some of the platform companies like the ones that you were talking about. And that led to falls in investment and just general nervousness among investors, both domestic and foreign as well. But at the end of last year, the Chinese government acknowledged that they had screwed all that up. And they said that they were done with the crackdown on the platform companies and that they were now embracing again the private sector, which they acknowledge generates all the growth in the Chinese economy. So that's a big, important change. Now, we can ask, well, that's just rhetoric. How do we believe them? But I think that it's clear that the government's primary focus right now is getting the economy back to where it was pre-COVID. And they need the private sector, they need the platform companies to be successful and to generate jobs again. So I think this is the direction that things are going to be going in over the coming quarters. And I'm feeling optimistic about that.
Andy, you mentioned that you're in Taipei on your recent trip to Asia. What did you see there? What were some of the takeaways for businesses in the U.S. and for businesses in Taiwan?
Well, one of the focuses of my week in Taipei back in February was to get a sense of how people there felt about relations with China, to compare it to the nervousness that we're hearing from a lot of Americans here about the risk that China might use force against Taiwan. And it was interesting. What I found when I spoke to people in the different political parties in the government was that everybody there told me they believe that Xi Jinping, the head of the Chinese Communist Party, is rational. And everybody also told me that they do not believe that he is preparing to use force against Taiwan. And that's also a view that's consistent with the experts that I speak to here in the United States, who look at the way that China's military is behaving right now, and they see no signs of the Chinese government preparing to use force, because this would be an enormous undertaking. And think back to the alarms that the US government was ringing many, many months before Putin invaded Ukraine, because we could see that he was preparing to use his military in that way. And there are no preparations like that. Also, I think that Xi Jinping understands that the use of force against Taiwan would not only be an enormous military risk, but would be an even bigger economic risk, especially in light of the coordinated sanctions that have been put in place against Putin. So while I think that many investors will remain nervous about this, I think the risk of conflict in the Taiwan Strait is actually quite low.
Hmm. I was in Taiwan last November and December, and I was actually back there briefly in February. And it's interesting how GDP growth forecasts at the end of the year have kind of dipped this year a bit in Taiwan. from an investor, from a foreign investor point of view, how would you suggest that fund managers and others look at Taiwan now?
Well, the GDP growth numbers you're talking about are probably influenced by a view that the world is slowing down, including the United States, and therefore exports from Taiwan will grow maybe a bit less rapidly in the near future. But I think it's important to recognize that a good investor doesn't want to invest in GDP growth or in a particular country. We're really about finding a handful of really good quality companies in any market, whether it's Taiwan or China. And that's why at Matthews Asia, we're focused on being active investors and bottom up company selection. And I think there's still some really great companies in Taiwan, like there are in China. And there's still great opportunities for investors there from that perspective.
Okay, great to see you, Andy. Thanks a lot for giving us the bullet points on your trip. Hope to see you soon in China or San Francisco. Thanks again.
Thanks, Russell.